And welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by giving an update to my portfolio, and then we're going to take a closer look at the quarterly results from Unum Group and STOR Capital. And then finally at the end, this is where reality is surpassing imagination, since I will share an article where you can see what people pay close attention to during this week. So let's start with a quick portfolio update. Well, the first thing we immediately notice is that there was a green circle for this week's episode. If we then go to the portfolio values tab, you can see that the value of the portfolio has increased with $700, so more or less flat for the week. But perhaps more important is that the cost of the portfolio has not changed, meaning that I haven't done any new investments. And if we continue to my favorites tab, namely the dividends tab, then you can see that we are off to a good start in August, since I have received a dividend from Bristol Myers and Verizon Communications. If we then go back to the overview arc here and scroll all the way to the top, just so you can see how each individual stock has been performing, well, then this is a natural segue to take a closer look at the quarterly result from Unum Group, since you can see that they have increased quite significantly in value over the week. So if we then start by going to Seeking Alpha and take a look at the stock chart and then focus on the last week, well, then we can clearly see that something dramatically happened on the 3rd of August. This was where they came out with their quarterly result. So if we look at the result here, then it is a classical example of what happens when you're beating expectations, since you can see that the earnings per share of $1.91 beat the estimate by 69 cents per share, which is quite significant. So it is not too surprising to see that the share price increased by more than 14% on the day. And this is in particular due to the outlook of the increase after tax adjusted operating income, where they're now expecting to grow between 40 and 45% relative to the full year of 2021, compared to the previous outlook of an increase between 15 and 20%, meaning that they are more than doubling their full year expectations. And if we just want a little more detail of what has actually happened with the company, well, if we go to Unum Group's webpage and go to Investor Relations, then you will see this screen. And you can see the results reflect improving trend in COVID-related mortality impacts, strong operating performance, and favorable sales and premium trends in core business segments. So it is really key to have this last phrase, that it is core business segments that are significantly improving. So this really serves as a good example of what happens when you're beating the expectations. Since Unum Group has such a low valuation, the expectations are not too high. And if you look at the year-to-date performance here, you can see that the stock is up more than 40%. And my position in it is up a little more than 30%. So it's not like I have timed the market perfectly or anything in that nature. I simply bought them because I thought it was a significantly undervalued company, and sooner or later the market should hopefully start to appreciate the stock more, since in the long run the earnings will determine what the share price should be. So in this case, for now at least, it seems that I'm right in my thesis. So what is then the downside to having shares in Unum Group? First of all, if you're buying in today, then obviously you're buying in at a completely different valuation than when I initiated my position. So you will naturally have more risk there. And second of all, this is an insurance company. And there's a famous quote that insurance companies are never more than one major disaster away from going bankrupt. Meaning, if you have a disaster like COVID once every 100 years, that will bankrupt some insurance companies. And that's a risk that you need to be aware of if you are considering investing into insurance businesses. If we then continue to STOR Capital, well, then we can see that they're also beating the analyst estimates, and they're beating them by 4 cents per share. And at the same time, we can see that they have raised their guidance. Previously, they guided between 220 and 223. Now they have revised that, and now they're guiding between 225 and 227 versus a consensus of 217. So if we take a look at the share price for STOR Capital, well, then we can see here that the share price have moved more or less sideways. It has actually fallen a little within the last week. So this is also a good example of, even though it is a good result from STOR Capital, it is nowhere as significant as we saw with Unum Group. I mean, looking at a week is also a very, very short time horizon. But I mean, if we go on the year to date here, well, we can see that STOR Capital is actually down close to 20%. And I mean, STOR Capital was not significantly undervalued when I bought them. Unfortunately, I was too eager to buy. I mean, don't get me wrong, I'm only down a little more than 10%. I'm luckily not down close to 20%, but I definitely was willing to pay a little too much simply because I wanted to buy into an excellent business. But this is a good example for me to illustrate what happens if you buy around the fair value or perhaps at a little too high value, even though that the company is doing great. Then even over more than half a year, you can still be significantly down on your investment. If you wish to know more regarding the quarterly result for STOR Capital, I highly suggest that you go and read the earnings transcript or listen to it. I don't want to go through all the details, I just want to highlight one particular paragraph. So if we scroll down, then this paragraph, in addition to 98% of our customers individually represents less than 1% of our base rent and interest, we are confident that our portfolio will perform throughout various economic cycles for several reasons. STOR has purposely built a diverse and granular portfolio of profit-centered real estate in vital and essential industries to limit volatility and deliver consistent cash flow. So why do I particularly want to highlight this paragraph? Well, essentially, this is everything which I want from a dividend growth investment, namely that they have a resilient business model that will perform well under various economic cycles, since they have structured their portfolio with vital and essential industries, so they should be capable of delivering consistent cash flow with a lower volatility. I don't expect this to be the best performing stock in the market at all, but I expect it to be more consistent than a lot of other businesses that I could have invested in. So this was a really good opportunity for me to highlight two investments in my portfolio that has been performing really differently since I have invested in them. Even though I believe that STOR Capital is a wonderful business, you can clearly see that perhaps I have paid a little too much, at least in this short-term period of 2 years. I mean, no one knows what will happen 5 years down the line, but so far it seems like Unum Group has been a better investment simply because the valuation was extremely low in that company. And ideally, I would like to focus more of my attention to how the businesses are actually performing. But before we do that, let me try to share a completely different news article as well. So if we go to Barron's, then there was this news article out that Nancy Pelosi's plane to Taiwan was the most watched flight in the world. More than 700,000 people were following whether or not this plane would actually land safely in Taiwan. I mean, you are really focusing on macroeconomics and what is happening in the world compared to what is happening for individual businesses if these are the news that you are sitting and following. I fully understand that that would have been catastrophical consequences if for some reason that this plane didn't make it safely. So the good question is, of course, how much attention should you pay to the general news and how much attention should you pay to the individual businesses? Well, I really believe that is a preference, but if you want to invest in individual businesses, then I think it makes a lot of sense to focus the majority of your time and energy into trying and understanding how they are actually performing, because in the long run, it is the earnings in those businesses that will determine whether or not it will be a good investment for you. And then we arrive at my final point, namely this distinction between focusing on individual businesses compared to focusing on the macro environment. Since if we are listening to Buffett, then he recommends that you spend the majority of your time focusing on individual businesses, since he don't believe that anyone has been successfully predicting the macroeconomic environment over decades, and it is really hard to get a competitive advantage on that. It is much easier to focus on individual businesses and then buy them when you think that you can buy them at attractive valuations. It's not the same as saying that you should not pay any attention to the macroeconomic environment. It's just saying that you should pay less attention to it. So that actually sums it up for yet another exciting week of the Lazy Money Game. So if you have made it all the way to the end of the video and have enjoyed the content, then please consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!